Market Watch, Global Overview, June 2021. The economic outlook continues to favor risk assets, despite fresh risks to the global recovery. First, consumer prices are rising in the US as the economy reopens. Excluding volatile food and energy costs, inflation is now running above the Federal Reserve's 2% target, as shown by changes in core personal consumption expenditures. But the central bank expects upward pressure on prices will only be temporary. Shortages of goods such as cars are likely to abate as production of key inputs like semiconductors recovers. Similarly, demand for services is surging as the economy reopens. But once activity returns to more normal levels, purchases of airline tickets and other services will stop rising so strongly. Firms should also find it easier to hire workers as vaccinations accelerate and US schools reopen in September, helping to reduce upward pressure on wages. Thus, the Fed expects inflation to return to its 2% target after the summer. This will allow the central bank to keep interest rates at rock-bottom levels. We forecast until as late as 2024, to continue supporting America's recovery from the pandemic. Second, faster vaccinations in the UK and the Eurozone are enabling Europe's two largest economies to boom as lockdowns are lifted across the continent. May's Purchasing Manager Indices, an important survey of business confidence, hit record levels in the UK and surged in the Eurozone. Third, new virus waves in Asia are hurting growth in Japan, Taiwan, Southeast Asia and India. But governments, firms and households are adapting to the outbreaks so that fresh lockdowns are having much less impact on economic activity in 2021 compared to 2020. Last, the US dollar is weakening to the benefit of emerging economies, and commodity producers and US Treasury yields remain at historically low levels. We see the euro and Chinese yuan rising further to 1.25 and 6.15 respectively against the greenback, and for 10-year Treasury yields to only reach 1.90% in a year's time. Thus, dovish central banks, faster vaccinations, resilient activity, a falling US dollar, and low government bond yields are all keeping the economic outlook favorable to risk assets.